Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge, banking awareness part of it. Okay. And in the previous lecture, we had completed the nationalization of bank and we had seen that which banks got nationalized during the time period of 1949, 1969 and 1980. Okay. So basically in this lecture, we are going to continue with the topic of the banking history and we will look upon other facts and figures related with the topic. This lecture is also very important from the examination point of view, but only if you have revised the previous lecture, then it will be beneficial for you more than those who haven't revised the previous one, because the concepts may be flooded out from your mind if you haven't revised them. So first make sure you revise the previous lecture carefully before you have come for this lecture. With this note, let's start this lecture. So as I have told you, financial knowledge is the topic we are going to cover and banking awareness is a part of it. Banking history is a topic which we have been covering in the banking awareness. Okay. So let's see this lecture topic. So basically this lecture topic is the liberalization era. What is the meaning of it? Remember when I was telling you that the Indian banking history could be divided into three phases. The first phase is pre-independence era. Second phase is post-independence era. And the third phase is, you can say pre-nationalized era, post-independence, and pre-nationalization era, and then we have liberalization phase and post-nationalization era. Okay, so if we look at the time period, then the first time period is from 1770 to the 1947. Okay. Second time period is basically from 1947 to the 1991. All right. And then the third time period was from 1990 to today's onwards. All right. So this is the time period we have looked upon. So the liberalization era basically falls after the 1991, right? Which means in 1947, we got the independence. After this, in 1949, we make the Reserve Bank of India as a state-owned bank, right? Thereafter, the 1969, we nationalized how many banks? 14 banks, which were previously owned by the private players. In 1980s, further nationalization or merger occurred. Okay, so that was the process we had done. And all this process is basically done for which? For which thing? To bring the efficiency in the banking sector of an economy. That was the meaning, right? To bring the efficiency in the banking sector of economy. But we were suffering a lot even after the nationalization of banks. When each and every bank, or you can say the major banks of India, basically, when the major banks of India got nationalized by the Indian government, we had a dream that we would achieve a greater heights and we would take care of the priority sectors and the, you can say, essential sectors of the economy. But what happened? the Indian economy suffered. Why? Due to corruption in the democratic machinery, okay, due to mismanagement, okay, due to the high welfare approach. All right. So these were some of the main reasons why the banking sector of India was suffering during the time period of early 90s. Okay. And if I'm particularly talk about the high welfare approach, it means that there was no private player in the banking market, which means that there was no aim to earn the profit, to start the competition. Okay. And there were no good services provided to the Indian customer. That's why the popularity of using banks were deteriorating, because people do not want to go to the bank, right? Because they are not getting the services, they are not getting a lucrative offers, they do not have any good chances by doing the or by using the banking activities. So these were the things happening. All right. So the banking popularity was deteriorating. Okay. Then we have to think about the liberalization era, which means what? In the early 1990s, India adopted economic liberalization policies and the banking sector underwent significant reforms. So finally, that was the year of 1991 when the India introduced new economic policy, which is also, or you can say famously known as the LPG. Okay, please do not pronounce it as a liquid petroleum gas. That was not. LPG. Okay, L stands for the liberalization, P stands for the privatization, G stands for the globalization. Okay, so these were some of the main factors introduced in the liberalization era. Okay, liberalization means the government liberalized the tight regulatory policies so that the businesses could grow themselves. Privatization means not only the banking sector, even the energy sector, transport sector, mining sector, whatsoever could be the major sector of the economy were occupied by the government. No private player is allowed, or you can say only a few private players were allowed in the market. Okay. So the privatization were introduced. It means that the private players were invited to participate in the Indian economy. And the third one is the globalization. Before 1991, suppose this is India. Okay. And this is a person who is sitting in somewhere like US or Russia. Right. They want to invest in the Indian economy. Okay. But before 1991, the Indian government policies were not foreign invest friendly. Due to this, what was happening? The India was lacking the foreign investment. And the India was some kind of closed economy. I'm not saying it was totally closed, but some kind of closed economy, because the outer players and the former players were not allowed to take the participation in. Okay, that was removed after the introduction of new economic policy. Okay, now let's talk about its impact in the banking sector. Okay, first is the globalization impact. What does it mean? The foreign banks were allowed to enter India and private sector banks were giving licenses to operate, leading to increased competition and modernization in the banking history. Now, how it is you can say beneficial. Let me give you an example. Suppose this is the Indian bank, any Indian bank XYZ. Okay. This is the foreign bank ABC. Okay. Now, Indian market is demanding rupees 10 lakh as a loan for various business activities, which could be used for the development of the economy. But the Indian bank just only having 4 lakhs and they are not sufficient to fulfill the demand. Okay. And if we're talking about prior to the 1991, okay, no foreign bank is allowed to operate in India in a full-fledged manner. So that's why the Indians who were demanding the loans often had to take the loan at high interest rate. Why? Because it's just a demand and supply rule. The demand is higher, the supply is lower. What will happen? Price will goes up, right? That's what we had discussed in the economics lecture. So similar thing was happening on that time. Demand for the 10 lakhs. Available cash or limit is only 4 lakhs. It means demand is higher, supply is lower. So the interest rate will be higher. Okay. Due to this, the various economic sectors were suffering. But if we allowed the ABC to come to the market, then what will happen? The remaining 6 lakhs would be granted as a loan by the ABC. And that's how the condition will be in the equilibrium. Which means that loan demanded is equal to the loan supply. Okay. So that's why when the foreign banks were allowed to come in India, it was a major boost for the banking sector. Okay. Second thing is that the private banks, okay, were given licenses to operate, leading to increased competition and modernization in the banking history. Okay. It means the private players which got restricted after the 1969 nationalization and 1980 nationalizations. Again, the private players were allowed to operate in the market and the licenses were issued to them after fulfilling the required condition. Okay. And this lead to the competition, which means the modernization in the banking history and also the services enhancement. All right. Now let's move forward. So the first major step was the entry of the private banks. Okay. Now, liberalization opened the doors for the establishment of new private banks. Prominent examples are HDFC, ICICI and Axis banks. These all are owned by the private players. Okay. And how they are beneficial for the economy. All right. And remember one thing, that's a question mark. Basically, I'm asking you, what was the reason, or you can say the main reason behind nationalization of banks from 1969 and 1980? What was the main reason behind nationalizing the banks? What was the main reason? Come on, we had discussed about it in the previous lecture only. So I want you all to think the answer. 5 seconds you have. 1, 2, 3, 4, 5. The time's up. The main reason was priority sector lending. Right? That's what we had discussed, which means the bank will prefer to give the loan to that customer who is able to bear the high interest rates, because the bank's income will goes up, and the whose people who require immediate loan, like the agriculturist, like the education person, like the house person wants a house loan and all this kind of loans, these persons could not get a loan if they are not able to bear the high interest rate. Okay. And this will give the rise to the inequality in the society, right? That was the main cause why we had to nationalize the banks in the 1969 and 1980. So if we allowing the private banks again, so what was the reason we didn't think the priority sector would not be benefited? What was that reason? which motivated the policymakers that now we should allow the private banks, and even we are able to take the care of priority sector. What was the impact? So let's try to understand this thing. Okay, so this impact was base rate and priority sector. Now you have to understand it. Then only you will be able to understand why the entry of private banks were necessary. Okay. All right. So let's discuss. The first is the base rate. Now, what is the base rate? I had told you about it. A minimum interest rate below which a bank couldn't lend a loan. Okay, like if you are taking rupees 10,000 as a loan from the bank, what do you think? You have to pay some interest to the bank, right? That's the income of the bank. That's what we had discussed. Like if the bank is paying you rupees 4 as an interest rate, then it is charging rupees 6 as a interest from the loan holder, and then 4% is giving to you, and the remaining 2% is the income of the bank, right? That's what we had discussed. So base rate is basically the minimum interest rate below which the bank could not lend an amount. So now the second question which should come in our mind is that why the bank will lower the interest rate? Like it should be the beneficial for bank. If they are charging the high interest, it means that the banks is earning the high income. So why would the bank will downgrade the interest rate? Why? The simple answer is consumer base. And how it operates? Let's check example. Suppose this is a bank A. This is a bank B. Okay. Now, bank B is provided the loan at 4%. Bank A provided the loan at, bank B is at 6%. Bank A is at 4%. There are 20 people who need a loan. All right. So just put yourself amongst these 20 people. If you have to borrow a loan, will you choose 4% or 6%? Obviously 4%, right? So now 20 of these 20 will reach the A because the A is offering loan at 4%. Whereas B will lose the customer because the B is offering the loan at 6%. All right. So what will be the impact of this thing? Remember, I had told you basically bank uses the deposit of its account holders for granting a loan, right? The loan which is granted by the you can say the bank to the customer is basically coming from the deposits which are submitted with the bank by their account holders, right? And when you deposit the money in your bank, you are entitled to receive an interest from the bank, right? You are entitled to receive the interest from the bank. Okay. So suppose if B promised 3% as an interest rate to the account holders who deposited their money with the B. Okay. So if the 6% is not coming to the B, but B is liable to pay the 3% because it has the deposit of its account holders. So in this case, bank's B income is 0. because all the 20 people who required the loans are going to the A due to the interest rate. That's what that is happening. Okay. And after some time, the B will become insolvent because it is not able to provide the interest rate to the account holders, and then the bank will liquidate and all the deposited of the account holders will be given to them. And this will does what? Eliminate the competition. Okay, right now they are two, but after the liquidation of B, there will be only one bank, and this may establish the monopoly. So now I hope what I'm trying to say, you have understood it, right? That's why the banks try to lower the interest rate so that they could attract more and more customers for the loans. All right. And this is dangerous because if the banks, or you can say if the competition in the banking sector is on the elimination, then it will lead to the monopoly of some certain banks. All right. That was the thing why we decided the base rate. Below the base rate, no bank is allowed to give the loan to customer to ensure the healthy competition in the market. Okay. Now come back to the topic. This is the additional information I have provided you. So when we decided the priority sector, so basically the government, or most probably you can say the RBI, directed the banks to provide the loan to the priority sector below the base rate. Okay, so that the people who comes under the priority sector may have the benefit to get loan at low interest rate. Because the banks were instructed by the RBI to do it for the priority sector. All right, that's how it means. If the 6% is the base rate of the bank, below which no customer will get the loan. So for priority sector, they have to provide the loan for 4%, which is below the base rate. Okay, but only for the priority sector. And other seasons or reasons where the banks could provide the loan below the base rate are two cases. First, for own employee, and second, against the time deposits. Only in two cases other than the priority sector, the bank could grant a loan below the base rate. If bank's own employees want to take the loan from that bank, then it could be provided below the base rate. And second, against the time deposits. Basically, time deposits are such kind of deposit which keeps with the bank for certain time period. And the famous one is the FD, which means the fixed deposit. And this is generally capped with the bank from 7 days to 10 years, maximum time period. Okay. The customer signed an agreement with the bank in which he promised that he will keep the amount for this certain time period, and in response of this, the bank will give him fixed interest. All right. That is a basic agreement of FD. So suppose you have submitted your money in January for or till December for 12 months. But it's only past the May, and then you need a urgent money. Okay. You could not withdraw your amount from the bank because you have deposited for the time period. So in these conditions, the bank will give you a loan against your deposit. And these loans are basically in the range of 80 to 90% of the deposited amount. For example, if you had deposited rupees 1 lakh, okay, and then you required urgent money, then you can take a loan against your deposit for 80,000 to 90,000. Okay, this is the case of time deposit, and this loan will be provided below the base rate. Below base rate, because it is included in the provision of granting the loans below the base rate. So that's how the private banks entries affects the you can say affects the banking sector. Thereafter, these banks introduced a high degree of competition which encourage innovation and customer centric services in the banking sector. Because the public owned banks and you can say the government banks they do not want to enhance themselves because they do not have their competition, right? So their customer services were not as per the requirements of the economy. Due to this, banking activities were discouraging in the country. But when the private banks entered and they had their competition, they tried to start the high degree competition with customer centric services to attract the more and more customer, which encourages the banking activities. Nowadays you can feel it. Okay. Thereafter, the second one is the diversification of services. Banks expanded their services to include a wide range of financial products and services. They ventured into insurance, mutual funds, investment, banking, and wealth management, providing customers with one-stop solution for their financial needs. Let's understand it. Okay. Like before the liberalization eras, when we had the public sector banks. Okay. So basically their services were very, very limited. They were not so diversified when it's come to the services. Like mostly they do the two kind of things: accept the deposits, second is grant the loans. These are the two main operations done by these kind of banks, public sector banks. Okay, but when the private banks and the foreign banks entered into the market after the 1991 liberalization, then they started diversify their you can say the services. They are just not only no longer the deposits acceptor and loan providers, but they also become issuer, like they issues letter of credits, bills of exchange. They also become the investors, like they invest in insurance, mutual funds, investment banking, all the things. They also become the counselors, like they counseled various people who are doing the trade internationally or domestically. So their services got diversified because they brought a competition in the market. And any player who is focusing on the traditional needs not able to survive in the market. Okay, that's why the services got diversified, because there is no other choice left for the banker owners. Okay, so students, in this lecture basically we covered till the diversification of services in the topic of liberalization era. Okay, in the next lecture we will continue with the same topic. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the next lecture. With this note, let's end this lecture and thank you.